Everyone, just recapping from my previous video, I had mentioned that I was going to show you guys a recap of my trades that I had taken up. So there were two quick scalps that I took on Solana a few days ago, and this is what I wanted to share with you guys in this video. So it's going to be a short and brief video, just showing you um, just a few specific details of my Solana scalp. So I am a scalper. I scalp assets. What I'm looking for in these scalps is very different from what a swing trader would do. I'm not sure if most of you guys out there are swing traders or day traders holding for a long position, holding positions for a longer time. But that's not my style. That's not what I do. I essentially look for very high momentum drives. Um, you know, most likely and probably around a key support and resistance, a level. So most of these trades tend to be breakout trades, not necessarily pattern breakouts, but even support and resistance breaks. And I just really like these kind of trades because they reduce my downside to a large extent, because I don't really hold these trades for a long time. I'm primarily in these trades for like roughly a few minutes, anything between 2 to 3 minutes. um, the longest I've held a trade is for probably 7 minutes, 8 minutes. Yeah. So, having said that, I definitely don't hold. Now, if there's something that comes down or up in the opposite direction of what I wanted to go, I'm out of that trade right away. I'm out of it. I don't like to take unnecessary risk. I try to reduce my downside to the largest extent possible. And Yeah, that's pretty much my way of trading. So I like to trade that quick profit, get out, and look for the next trade opportunity. Uh, this one specifically is going to be on Solana. I have been looking at Solana since the last few weeks, probably months, couple of months. I did, I was lucky enough to get this chance of, entering Solana right down at, I'd say, roughly around, I think, $15. Yeah, that's what I got Solana. I hold a lot of crypto, on spot, but my trades are primarily quick shifts, quick runs. Anyway, this one was taken around the 22nd of December, October, my bad. 22nd of October, 22nd to 23rd of October. That's when I took this trade. Now, what I want to basically look at before I enter any trade. So I have been following this pattern on Solana. So Solana is one that has broken out of these contracting triangles or wedges, if you may call them, whatever you guys can call them. Um, I like to call them contracting triangles because they do look like triangles that contract. So I basically like to trade these, because specifically with Solana, because Solana has this pattern repeating time and again. We've seen one breakout just here. We've seen one breakout down as well. If you go zoom into these smaller time frames, you'll have a look at that. But this one was a projected move. I still have this on my chart. I know that this is probably what's going to play out. It might not even play out, but this is what I assume should play out if things go as per plan. So this is the move. I'll tell you why I estimated this move to be here in a neck in in another video. But for this video, I'm just going to stick to the scalp. Getting into the scalp, this was roughly around the 22nd, 23rd, just around midnight. Um, Before I enter something, so I know that this is in an uptrend. How I confirm this is by going to the daily time frame. I'm looking for a clear uptrend or a downtrend. Uh, Confirming this on the 4 hourly chart. Let's have a look on the 4 hourly chart. On the 4 hourly chart, we can see briefly. Let's assume that this was the point at which we could have a look, or let's say this was our point, right? So up until this point, we know that we are in an uptrend. How do I know that? Let me make this more clear for you guys. I'll just drop a vertical line here. Let's make this a little darker. Yep. So we know that we want to trade something around this part. So we know that, let's shift it a little more behind. Yeah. So this is, we know that we are in an uptrend here. So this is the 4 hourly time frame. Let's go down to the 1 hourly and have a look to see if this is the same. Yes. So how do we confirm this is an uptrend? We know that this is making higher lows here. So this was a low and a higher low. Now this was a slight retracement, but we're still making consistent higher lows. When we are making consistent higher lows is like this. These are higher lows. Perfect. So we know that we're in an uptrend. My bad. We're in an uptrend and we want to make the most use of this uptrend. So what I do now is I primarily trade on the 1 hourly, on the 1 minute and the 5 minute charts. Of 5 minutes very rarely, but 1 minute and the 3 minute charts. Yeah. So what I'm going to show you now is the trade I took on Solana. So let's go into this. Okay. Yes. So this was my trade setup. I saw that this was forming a support at this point, right? So we've broken out of the triangle. We've come a long way up. We've consolidated here. This has been a stage of consolidation around this area, just around the base. So it found some massive support at these 199, 200, 201 levels. We're looking at this consolidation play out, clear and clean sideways movement, and then we're going to have an impulse move to the upside or to the downside. This was more likely to go to the upside because of the huge momentum. There was huge volume. So if you look at this breakout here, we're looking at volume, this kind of volume here. So when we have this kind of volume, we have this kind of volume here. The breakout had massive volume here. We are most likely going to the upside, right? So we've gone up, we've tested this high here at around 214, and we were rejected from those levels. Now, after looking at a rejection from these levels, we've come tested this level here. This level was roughly around this level was roughly around 204, right? And then we're making our move back up again. Sweet. Now what I like to see in this is marking out the support and resistance areas around this downward wave. Now we know that when we're going up, we have resistance, correct? So where were the major areas of resistance? Resistance at 209. We had a little resistance at 207, this yellow line here. We had resistance at 208, a little bit over here, a rejection. So if you look at the resistance going up, it's clearly played out as support while coming down. Now, resistance at 207, 785, right? This is the line. We hit this, we got rejected down, we went up again, broke through, found support right down here. So if you look at this little red candle, that was support. Initial resistance turned into support. Same with the 208 level. We're looking at resistance here, rejection, breakthrough, clean breakthrough, good volume, and then we find support down here, this region. But we break support, we come down to 207, we find more support, continue our upward motion, right? Now, on the way down, we have found support at these key levels of resistance, which have now turned into support down here. So I start marking these out, which have now been marked out, right? And we are trying to, what we're trying to do here is basically prepare ourselves for the next leg up, right? So I mark out my resistances and supports here with these lines. You can just, these colors don't really matter. I just mark them out because they just visually keep my mind alert. So if I had everything in yellow, it's just going to make my mind go crazy. So I just like to have different colors, right? So we are now looking at an upward momentum again. So we find this little double bottom down here. We have the neckline, which is the 207 level. Now you can trade this for sure. This is definitely a good pattern to trade. but there is a little amount of risk here. So there was a little breakout, a fake out, came down, a little rejection, but found support again, and then you had the upward motion. So I don't want to trade something like this. I want a clean break. I want those, several green candles. I don't want that, little rejection. That's what I want. So I want an impulse move, very high momentum, backed with some good volume, some good technical indicators showing me, yes, this is something worth taking right now. So the main indicators I use on the 1 hourly chart, the 1 minute chart, I beg your pardon, is um, a combination of three different moving averages. So I use the nine, and these are all exponential. I'll explain and get into that in a minute. I'm using these three moving averages, right? So I'm using the 55 EMA, the 21 EMA, and the 9 EMA. Now the 55, the yellow line, green line, and blue line. Blue line's a 9, green's 21, and yellow's 55. I use the 55 as a base, which means in an uptrend, I'm trying to look for price using this yellow line as a support, which is, so let's say price is in a downtrend, it's reversing, going up again. We want to see that the price breaks through the 55, it finds a resistance level, gets rejected, and finds support around this 55 EMA. This is what I want to see. Once I see this, I know that the 55 EMA starts acting as support. And once it starts acting as support, I know that there is potential for an upward momentum. I let this wave run up. I like to trade this in several different ways, one of which is what I'm going to explain today. I'll get into the other ones later. But we've broken through the 208 level. Now we've approached the 209.16 level, right? We're still holding this 9 EMA very strong. We haven't crossed. So after crossing the yellow 55 EMA, we've climbed onto the 9 EMA. We're not breaking it down. Even though we had a little rejection here, we still held support and we're going up, right? Now we reached this level over here. We know that this level has acted in the past. This level of 209 has acted as support at some point, which gave up and it fell through. Now we know that we're going to find some amount of rejection here. So what we want to do is we want to see. So, trading is not about guessing. It's not about estimating, or hoping for something to go your way. You want to make the most of that momentum. The momentum is going to come from the big players. It's not going to come from you or me. It's going to come from the big players. What you want to do is ride the wave. You don't want to sit holding something that's going to may or may not play out in your favor. That's not what you want to do. At least that's not what I do, right? So I'm gonna make this a little lighter so we can see what we're looking at. Yeah. Now my essentially my ideal entry would be at the break of this resistance, which I did take. I took my entry around here. So I wait for this to start reacting with this support, this resistance level. Once we have a slight break of this resistance level, it's a very fast moving trend. You've got to catch it very soon. So what I would ideally do is I see price approaching this level. I see it hits and I wait for it to close a candle. If there is a candle close above this resistance level, a little above, I take my entry right there, because I know that there is a high likelihood of it continuing upward without breaking down this resistance turned support and then going back down. There's a little lower likelihood of that happening. So what I would do is, if this candle had to close above this resistance level, I would take my entry right there. But it didn't. So it bounced off, created a red candle, but then found support again and then started moving upward again. At this point, I want to wait to see if this resistance level breaks down and the price shoves through. So once that happens, once you see price break this high, because this was the point of rejection, this high was at around 209 255. I want to wait for price to go above that in that instantaneous candle, right before the candle closes. So I wait for the price to break 209, 255. I wait for that on this candle. I wait for it to break that level. And the moment it goes above 255, I place a market order. That's what I did. I placed a market order right at this point. That was now obviously, with such high momentum, you're not going to be able to catch it at 300 or 345, but I caught it around 400. That's what I caught it at, 400, 450. And your stop loss, that was my stop loss, was right under this support level. So if my support level is 209 160, I'm going to put my stop loss down at around 209, maybe 209.10 or 209 whatever, so 209, let's say, I would still say around 209.50, 209.50 or 209.20. That'd be the best. I would say, yeah, that's pretty much it. That's where my stop's going to be. And I enter the trade. I work my way through it. It breaks through this level. And that's when you're going to see. So, what would I recommend at this point? This is just about entering the trade, right? Now, why would I enter the trade? This is how I entered the trade. But what would make me enter the trade? So, the first reason was, yeah, it broke the support, the resistance level. But what was there? That's not going to be enough for me to just enter the trade. I want to see two things with this. So what I want to see here is, I'll show you. So what I want to see here is the tape. This is an absolutely amazing indicator of price action. So, initially you'd completely be blown away by what's happening here. Don't really fuss yourself around getting into each detail. But I would say if you are experiencing a very strong uptrend and you want to put in something like a long, you want to bet on the price going up, you've confirmed that this is an uptrend in the macro picture, on the daily time frame, on the 4 hourly, you know it's an uptrend, it's a strong uptrend on the 1 hour, on the 1 minute. Now, what you want to do is you want to see at what level. So you know that, okay, this level at 209, this is a really important level for me to enter. I want to back this up with some more evidence. I want to wait for price action. So what I'm going to look at is these numbers flashing crazy, right? I want to look for a large quantity on the green side. If I do see a large quantity on the green side, I want to see the number of, the quantity on the red side as well. At this point, you can see that it's almost equal. You can see a 500s, you can see some 300s, you can see some 400s. Again, you can see some 134s. But there's going to come a point when you see really low numbers here, and you've got to make that decision yourself. So you got to make a comparative decision where there's really low numbers here. Now, don't say that there was 600 here and there was 400 here and I entered the trade. That's completely stupid, because you know that that's not a bias, right? That's almost equal. That's not a bias. When you have such large number of quantities and orders coming in, you've got to see a real majority. You've got to see which side of the market is more strong. Are the buyers stronger or the sellers stronger? Like you've seen right now, you see something like this: 18, 20, 20, 20, but you see 600s here. So that's what you want to look for. You want to read that tape. You want to see where this happens. There's another thing you want to see before you enter your trade. What I like to use is something called the ATR. This is called the ATR because it shows you the true range of this chart. What it basically shows you is the true range for the last 14 periods of this chart. If you guys want to know what the ATR is in more detail, you definitely find more resources on YouTube. Have a look at this chart. Have a look at this indicator. It's really something that you should. I suggest you should have in your toolbox when you're trading. So what I look for is the ATR. So when I say I look at the ATR, is what was the volatility like at that point? Was it low or was it high? I don't want to be trading a low volatility. What I want to trade is something like this, when price movement is mental. This basically shows that, yeah, you know what? At this point, price was not moving too much because the ATR was absolutely dead. It was at 0.3, 0.4, whatever. But at this point, you see how the ATR pumped up? It was at 1.06. And here, you see this. This is the move I'm talking about. You see this move here? This is the move here. This was at 1.06, and this down here was dead sideways movement. We don't want sideways movement. We want vertical movement. We want very strong price action. So coming back to that, the ATR roughly around here sideways was like 0.3, came up at the top. We again experienced a high ATR. Coming down again, we had a high ATR, but the ATR did not stoop down to 0.3. It stuck to 0.7 even here. Even here. It's still in those mid ranges here. And now we're seeing another spike of the ATR going up again. If you look at that, you see. So you want to look at an ATR which is pretty high. It's got high volatility. So that's what I look at as well. So at that point, I saw that, yeah, you know what? The ATR is looking decent. We've got a good amount of volatility in the markets at this point. This is the point we entered. And we've got our moving averages, right? So I know I've got a bounce off the yellow, which is the 55. We've got a hold on the 9. We know we're moving up. We've got a key level of support and resistance at this point here at 209. We've got a good support resistance level. We've got a good level at the ATR. So these indicators say, okay, you can go in for the trade, but make that wise entry. Now, when I make the entry, I read the tape. I read the tape to see, yes, okay, buyers are in control. I am in a good position to put in that trade. When I also see, like you see this, 958, you see this? This is what I mean. So when you see that 900 quantity or the 1000 or that 1200 quantity coming in, you want to see the price as well. At what price did this guy buy? He's buying at 187,065. So I want to enter roughly around his price because there's a high likelihood that there's going to be a pump in that direction, right? Now, getting into that trade again, I looked at the volume again. It was massive. It was growing. We have a growing volume here. We didn't enter the trade up until here. We don't know what's happening ahead. So from here, we see volume increase. We see the volume increase all the way here. We want to pay attention to the volume as well, right? I took my entry in here. I wait. Once my entry is in, my stop loss is in, this pumps up. This breaks the level again, the level on top. That was 209,995. We find support at that 995, and then we see these beautiful 3 big, large green candles. Volume increasing. No stress. I'm not worried about the price coming down. Yes, you will have fluctuations. You've got to hold your heart, right? You got to hold your emotions. You got to be very, very careful that, you know what? If there comes a time where I see a large volume, a red volume candle, I'm going to exit. It tried breaking through the it tried breaking through the 214 level, and we did not see much of the volume coming in. So we do see a spike up, we see a rejection, and then suddenly we see a large red candle come up. That's my point when I say, okay, I'm done with this trade, I'm exiting. I have a market close and I cash my profit in. I will show you my profit again. At this point, I don't think this can be shown for some reason, but I'll show you a clip of my profits again. But that was my scalp exit, right? Why did I exit? I exited because I saw this large red candle come in. I don't want any red candles in my trade. I want all green candles. I want to be going smoothly through the momentum. I don't want any wastage of time, right? So that was pretty much the first trade. I'm going to get to the second trade in a bit. All right.